You're welcome back. Now let's look at the first requirement of this question, which is to prepare a realization account. Note that the most important account in dissolution is the realization account. And in preparing a realization account, the first thing you must always do is to transfer the carrying amount of the partnership assets and liabilities to the realization account. And how do you do this? You do this through the journal. Though we were not required to open a journal, I'll just tell you orally what the journal entries will be. Okay, now let's transfer the assets and liabilities. The first asset in the statement of financial position is premises of 150. So what we do is we will transfer this premises account to the realization account by crediting the premises account and debiting the realization account. Okay, so let's do that. So we have premises on the debit side of the realization account to be 150,000. For machinery also, we will credit the machinery account and debit the realization account. So let's have machinery, and it's 36,000. Okay, the motor vehicle, we will credit the motor vehicle account and we will debit the realization account. So let's have motor vehicle, and it's 14,000. Okay, the next asset is inventory, 11,000. So we credit the inventory account to close it, and we'll debit the realization account. So let's debit the realization account. So we have inventory, and it's 11,000. Okay, the next is trade receivable, and it's 7,600. So we credit the trade receivables account and we debit the realization account with 7,600. So we have trade receivables, and that is 7,600. We will not transfer the bank, okay, because we are not selling the bank. That is the money we have in the bank, so we will leave that. Now let's go to the liabilities section. We have trade payables, and it's 6,400. So we'll debit the trade payables account and we'll credit the realization account. Let's credit the realization account to trade payables. Okay, so we have trade payables, and it's 6,400. Okay, as of now, we have transferred all the carrying amount of the assets and liabilities. Let's then deal with all the transactions that relates to sales of all the assets, because when a partnership dissolves, they will sell all their assets, they will settle their liabilities, and they will pay off the partners. So let's do that now. The ones that relates to selling assets and settling liabilities. They told us that the goodwill was sold for 30,000. The double entry for this is to debit the cash or bank account and we credit the realization account. So let's credit the realization account, goodwill, into bracket bank, and the amount is 30,000. Also, the machinery was sold for 24,000. So we credit realization account with machinery, put in bracket bank, and that's 24,000. The next is inventory, was sold for 12,000. Let's credit the realization account. Inventory, okay, we'll put in bracket bank, 12,000. Now, we're told that the partners took over some assets, and when partners take over assets, we'll credit the realization account, we'll go and debit the partner's capital account. So let's have cash taken over. P took over an asset for 4,000. So let's have it there as 4,000. Okay. Q took over an asset for 6,000. Okay. So let's have it there. Q, 6,000. Okay. R took over an asset for 3,000. Okay. R. The value of the car is 3,000. Okay. We're also told that the premises were taken over by R at an agreed value of 162,000. Okay, so on the credit of the realization account, we have premises taken over by R, and that is 162,000. Okay, now we're told that the amount collected from trade receivables amounted to 7,400. So we have trade receivables on the credit, put in brackets bank, and that's 7,400. Okay, we're also told that the trade payables were discharged for 6,280. So we have trade payables on the debit of the realization account because now we are paying. So you credit the bank account, you debit the realization account. So we have trade payables, put in bracket bank, and it's 6,280. Okay. And finally is that the cost of dissolution amounted to 700. Okay. These were the expenses relating to dissolving the partnership. Maybe we have to transport some items from one place to another. We have to pay some people. Those are dissolution costs. So you credit bank, you debit realization account. Okay, so we have dissolution costs, and that is 700. Okay, now let's balance this account. The total on the credit is 254,800, while the total on the debit is 225,580. The credit side, which is the sales side, which is the inflow side, is higher than the book value side or the cost side. By how much? By 29,220. Of course, that will be a profit on realization. This profit on realization will be shared among PQR in their profit or loss sharing ratio, which is 3:1. Okay, so let's have share of profit on realization. So P will take 3/6 multiplied by 29,220, and that gives 14,610. Q will take 2/6 multiplied by 29,220, and that will take 9,740. R will take 1/6 multiplied by 29,220, and that will be 4,870. Now, this profit on realization will be credited to their partner's capital account. Therefore, the two sides of the realization account is now the same. 254,800 on the debit, 254,800 on the credit. And this is how you prepare the realization account. It's straightforward. In the next video, we will look at the partner's capital account. Thank you very much. See you in the next video.